Hello, Jaguars. This is Fahad. I'm back. Today, I want to take a look at Edwards Lifesciences, symbol EW, Edwards Lifesciences. The message here is it's time to get long. All right, so we're going to use the same three-prong approach that we use all the time based on technicals, fundamentals, and unusual option activity. I've been watching this stock for about last week and a half. And, I always keep a very good inventory of the stocks I want to buy on pullbacks. And I wait for the moments when those pullbacks are finally coming, giving me the opportunity to get long. And so we carefully pick out the spots technically on the chart where we want to get long in order to make an option trade. And that's, I think, what we have over here. I think it's time to get long Edward Lifesciences. So let me show you, let me walk you through step by step. Okay, so here's the daily chart right over here. And what you're going to see over right here was April 4th. There was a big, massive breakout on very high volume through $90 level. It went from 90 to 105. And then it continued to climb higher. And then since in the last month and a half, it has gradually come back down slightly. Okay, it has partially filled this gap. It went all the way down to $97 level. It has partially filled this gap and now starting to take next leg higher. I believe that this is start of bottoming formation from here, and you're going to see this move back higher towards 110 or even higher from here going forward. So technically, if I were to just go closer, this is the more zoom in version of the same daily chart. If I grab right from here, if I grab this top right here and draw a trend line, let me set this way and this way. Okay, so here's your trend line. Let me edit the properties over here so you can see a little bit. Here is your trend line. So see how it came back down, and today it's breaking out. It's breaking out through this trend resistance right here. Okay, at the same time, look at the MACD right here. After it's been coming down since April 22nd, and it's finally bottomed and it's starting to tick higher. And I think very soon we're going to see a bull cross in this. Same thing with the RSI. It has been coming down, and finally today RSI is making higher high. After making higher low, it is making higher high. The volume was pretty impressive on this 2 days ago, right here. Another way of looking at this, see how it was making lower highs and lower lows, lower highs and lower lows. But then when it pulled back on Tuesday this week, it did not make a lower low. Okay, it made a lower high. So, it didn't want to break down anymore. And then yesterday, while the rest of the market was kind of, funky, up and down, not doing much, this thing basically printed a bullish engulfing candle right here, which was yesterday. And today we are seeing a very good follow through to the upside as it breaks out from this downtrend resistance. Another way of showing this, the same exact chart, is right here. This is from stockcharts.com, same exact chart. Just let me expand this a little bit. And basically you can see same exact pattern right here. So it's a huge high volume breakout. Then it came down on, the volume was slightly elevated. There were a few other reasons why that was happening, but today it is breaking out again after making after a bullish engulfing candle yesterday and a nice follow through today. So my target on this is 108. Okay, $108 a share, which is basically, it could be 108, 109, whatever you want to call it, but I'm basically using this reference point around here. This is the volume of a price resistance. So my target is 108. But fundamental story here is very, very strong. So if it actually continues to, if the catalyst that I'm going to point out play out exactly what I think, this 108 is probably going to be no trouble for the stock to take out. You could see this power higher even above that. But my target right now is 108, which is about 7% to the upside based on where the stock is trading right now. Here's your RSI, it's breaking out, giving you the bull cross, and here's the MACD that is starting to move higher. Okay, so that's all technicals. 108 is your target, and we're going to use a stop loss on this, which was that low from May 19. That low was 97.20. So we're going to use that as a stop loss. So basically you have about 4% downside risk. If that stop is taken out, we're just going to exit. And you have a target of 108, so about 8%, 7 to 8% to the upside. That's your technicals. On the option side, this is what you need to pay attention to. So, right? So there's a lot of open interest over here on the call side, but the one that catches my attention is right here, August 105. Okay, August 105 call. There's 1,500 call open interest over here. If I click here on this August 105 calls, and I go to more, and then I go to TOS charts, and I click here, and here it populates, and I maximize this. This is the actual, let me get rid of this theoretical price action. We don't need to see that. Apply, close it. So this is the actual price of the call options itself. This is August 105 calls we're talking about. And see this big volume right here? This blue line is your open interest. On May 23rd, somebody came out and bought 1,000 contracts of these May 105 calls. 1,000 contracts of these August 105 calls. This was on May 23rd. Okay? And they paid, let me show you exactly what they paid. Right here, this comes from LiveVol. So you can see right over here, this is on May 23rd right here. And a total of 1,000 contracts traded at August 105 strike calls. And this is what they paid. They came out around 12:20 p.m. and they bought 1,000 lot, and they paid up to $4.30 offer side when the bid and ask was $4 and $4.30. So this is approximately $430,000 bullish bet that they opened back on May 23rd, August 105 calls. These options are still going about the same. The bid and ask right now, is 390, 420. They're going about the same. They were trying to bottom tick. If I go back to the chart, remember this activity took place on May 23rd. So going back to the chart, look what happened right here. Okay, this downtick that we saw was on May 19, and then it came coming back over here. They were looking for a breakout essentially last week on this. That's when they were positioning, and now a week later they're finally getting that breakout. Okay, so they were positioning for this as the stock was partially filling the gap right over here. Okay, so $400 and some thousand bullish bet that is situated in August 105 calls, and that's my recommendation. I like buying these August 105 calls straight up. Okay, no spreads needed, because I think there is a slight chance this may get acquired. Also, there are certain catalysts coming up that I don't want to limit my profits. Let's just go with the straight calls. So I like buying straight August 105 calls. Currently, they're going for $4.0420. You know, before I started making this video, these calls were going for, you could have bought these for $4, and now it's going to cost $4.20 because the stock is moving higher. Here's the intraday chart right here. So it's starting to move higher as I'm making this video. So, hopefully we're not going to miss this opportunity. But if you can get this for $4.20, just go ahead and buy it. Now, on the fundamental side of the things, going back to what happened right here on April 4 when the stock spiked big time. This was when the company announced Sapien 3 data. Okay, the Sapien 3 data is a valve for heart failures and all kinds of things, and it was absolutely phenomenal. It was fantastic data. It was so good that the analyst community, that all the research that has been coming out since then suggests that even though the company is guiding the FDA approval before they're going to launch this and going to start selling, they're guiding an FDA approval sometime in September, because that was the original guidance that they put out about a year ago. But the data is so clean and so good that most analysts think that they're actually going to see this data move forward. So they're going to actually see an earlier acceptance by the FDA probably this summer in June or July phase, which is part of the reason why I'm going with August calls. All right. So I'm going to walk you through some things one by one. First of all, here is the research note from Morgan Stanley. All right. A point that I want to point out, this is basically talk about exactly what happened on April 4th. This is from April 4th. It talks about clean sweep will drive total TM, means total addressable market adoption. Okay, Morgan Stanley believes the company is going to be actually capture 20% of the market share in penetration immediately in the entire valve market. I mean, we're talking in just the next couple of months, immediately after the FDA approves this. They think that the market share will expand by next year to 40% of the total market. And it's a big, giant market, okay? But frankly, based on some of the research that I'm reading, this could be huge. This could even go significantly higher from here. And so we could see this, 50, 60% of the market share probably in the next one or 2 years. And so If that happens, we're going to be looking at, the earnings estimates going sharply higher than what the street is expecting right now. Here's some of the things that I want to highlight in this one real quick. Right here is the clinician feedback was nearly universal that the data will stimulate the referral channel and move surgeons to capitulation. We model TAVR growth of 28% in 2016 versus guidance of 15 to 26% and 23% in 2017. Okay, so the company originally guided 15 to 25% growth, a conservative growth, which is also something the company has mentioned previously. But here, the feedback that Morgan Stanley is getting, based on their research from the clinics, it suggests that they're going to see this thing is going to change the move surgeons to capitulation, and we're going to see TAVR growth sharp acceleration to 28% in 2016. I can tell you this, that looking at the forward earnings estimates on my side, I have not seen consensus move those estimates higher based on what this research is saying. There's also another thing. The company guided originally that they see a long-term view of the total market size, total addressable market size reaching $5.5 billion by 2020. I understand this is the next 4-year outlook, but market is always also forward-looking, so they're gonna pump up the actual price to earnings multiple ratio on this. Morgan Stanley believes that it's going to actually surpass that. It's going to surpass as much as to $8.3 billion. I mean, they were already raising estimates on April 4th this was. On April 4th, Morgan Stanley was raising the estimates from $7.8 billion to $8.3 billion. They also see that across all risk categories, we modeled 65% penetration in the U.S. and 50% penetration in Japan. Again, I think that this data being so strong, the way we have seen, I think you could see the 65% not only will happen, but it's going to happen earlier than expected. All right? What I want to do next is, after closing this, last week on May 22nd, RBC Capital was meeting with the management of Edwards Lifesciences, okay? And there are two guys, that I talk about, the Michael Yee all the time, who works for RBC Capital on the med tech side of a space. Michael Yee is on the biotech side, on the med tech side of a space within the healthcare sector at RBC Capital. Here is Glenn Navarro, all right? I want you to listen to just a minute or 2 minute clip from here that I paused regarding Edward Lifesciences. This was after the analyst met with Edward Lifesciences management last week on May 22nd. So take a look at this.
So we feel good that intermediate represents a big opportunity. We also got the sense that there's a nice bolus of patients waiting on the sidelines. Obviously, one indication will be how is the continued access protocol for SAPIEN 3 and intermediates enrolling. Post-ACC, with the great SAPIEN results, I think a lot of investors believe that intermediate, once approved by the FDA, there'll be a big bolus and a big ramp in sales. We got the sense that post-ACC enrollment in the CAP has picked up, so I think that's a really good sign, and I think there is a nice bolus of patients waiting. We continue to believe that SAPIEN 3 for the intermediate indication will be approved over the next couple months. Edwards assumes September, October. We think it's going to happen more over the summer. Not a lot for the FDA to review here. It's not a new device. It's just the data. The data's clean. So we anticipate a sooner than expected intermediate label expansion. We expect a strong ramp in intermediates, and we expect sales and earnings acceleration for Edwards in the back end of the year.
Okay, so the main key takeaway from there, all right? It was about a minute and a half clip. It was actually a 10-minute long video there talking about just Edward Lifesciences, but two main things that stand out for me in that particular segment right there. One, they walked away with a view after meeting with the management that there is a huge pent-up demand that is just waiting on the sidelines for for SAPIEN 3 to come to the market, okay? And so that demand is going to come roaring back, and that means the forward earnings estimates are going to move higher, okay? Now, when is it going to come back? When is the pent-up demand is going to come into the picture? The second part of that particular video that I walked away with was that, once again, while the company is guiding FDA approval sometime in August-September timeframe, most analysts, including RBC Capital there and Morgan Stanley, and I have another note from Bank of America, they believe that there's no reason for FDA to hold back. It's not a new device. It's basically the same exact science. It's just new data, and the data is clean, which means they expect the FDA approval to come in earlier than expected, which means sometime this summer. Could be next month, could be July. So as soon as that FDA approval comes in, we're going to see sales just sharply move higher. All right, so we're going to see sales just sharply move higher. Now, so the question is, if that is going to happen, what is going to spark the actual, what's going to move the analyst higher? I want to tell you exactly, there is one catalyst that is coming into play over here. Okay, so you need to keep this in mind. There is a transcatheter conference that Edward Lifesciences is presenting from June 16 to June 19. Keep that in mind. June 16 to June 19, there's a transcatheter conference taking place. And they're going to talk about SAPIEN 3. And they're going to talk about pent-up demand. And they're going to talk about when the FDA approval is coming. And they're going to talk about what their long-term outlook is going to be. That, in short term, is your main catalyst. June 16 to June 19, there's a transcatheter conference that's taking place. I expect the stock is going to run higher into that event, and after that, we're going to get some more bullish commentary from analyst community, and the stock is going to probably continue to move higher after that event as well. So that's in June, which means that it's going to be a play right here with July call options, right? However, earnings are after July. Earnings are not in June. Earnings are after July expiration. And that's why, just to be on the safe side, I want to bypass June. I want to bypass July. I want to go straight to August. August 105 calls when I recommend this trade alert, because it will cover potentially three major catalysts. Buying August calls is going to cover 1, this conference that's coming up from June 16 to June 19. 2, potential FDA approval, which may come in early. And 3, the next earnings, which I believe the company is going to use to raise the guidance. Okay, the company is going to raise the guidance, full fiscal year guidance. Last thing I'm going to talk about is this right here. How was the last quarter? This is my note from April 26th. And I just want to mention, this was the Q1 results. Put EPS 71 cents versus 66 cents estimates beat. Q1 revenue 687 million, 664 million estimate beat. The Q2 guidance was raised 70 cents. The Q2 revenue guidance was raised 720 million or 698 beat. Fiscal year 2016 guidance was raised 2.72, and fiscal year 2016 revenue guidance was raised. Every single metric was raised, and guess what? They have not even got the approval yet from the FDA about SAPIEN 3. That's the actual main growth driver that has yet to come. All right, and they haven't even got that approval yet. So the way I look at this, everything is pointing to upside. I think this is a phenomenal growth story that's going to kick in sometime in the second half of this year, and it's going to continue well into 2017. It is also potentially a buy and hold at this particular time. Technicals are pointing to upside with MACD and RSI showing bull crosses. I'm looking for a target right here at 108. And you had a buyer of $400,000 worth of call options at August 105 is strike calls. That remains an open interest. The trade idea here is no spreads necessary. Go straight to August 105 calls and buy straight August, and buy them for $4.20 or less, and then just put them away for the next 1 to 2 months and see what comes out of that. All right, that's it.